got existing home sales for February out at the top of the hour. And just to reiterate those numbers, we saw a decline of 6.6% month over month, coming in slightly below estimated 6.22 million annualized rate. That, by the way, is the lowest since August. Part of it probably has to do with what's going on with inventory on the market. Let's talk to Mike Miedler now about what we're seeing in terms of housing. He's the Century 21 CEO and president. Mike, it's good to talk to you again. Is this indeed what's happening here, that basically there's just not enough inventory on the market? And what are we then going to see, not just in February, March, April, going forward? How long is this going to be a problem?
Yeah, Julie, thanks for having me back on. I think that's exactly it, right? I mean, it's down 6 percentage points from the previous month, but I think a lot of that has to play into some of the weather that you might have seen across, whether it be Texas or the Midwest, and then even here in North Jersey and across the Mid-Atlantic, some snow and things like that I think slowed things down. But it's still up, 9% year over year, and quite candidly, with median price up 16%, it really is all about inventory right now. We're seeing inventory levels that have had a record drop. I think they're down 30% is what they said year over year, and homes are flying off of the market in a record 20 days right now. Generally, in a natural market, that's about 60 or 70 days, and we're literally seeing homes just be gobbled up as soon as they're on. And so, inventory is the big driver right now. We got to figure out a way to get more of it.
Mike, we have been hearing housing has slowed down a bit over the past 6 weeks, in large part because of the rise in the 10-year. Have you seen that?
No, we haven't. I mean, you see a little bit of rise in the interest rate and the mortgage rate, and it just boosted a little bit. But you got to recognize it's still at historic lows. I bought my first property 20 years ago at about 7%. And so people ultimately have a lot of buying power still in their pocket with where interest rates are right now. I think the median price home, if you put down 10%, you're still on par with renting, what you'd pay for a median rental across this country. So I think there's still purchase power there. You have to worry about, continuing increases in the median sales price, which hasn't slowed down in over 100+ months. But it's just being driven, gang, by really strong demand. And I think, again, you still have a lot of buying power in your pocket with where mortgage rates are today.
Now, Mike, as you know, any house can sell if it's priced at the right point. So, we can't say that, X house can't sell for all these other reasons. But are you thinking that maybe the environment, as we get into the second half of this year, let's say, we might see buyers stop making the kinds of concessions that they probably would have made, compromising on, the bathroom, the master, the kitchen, the way that we've certainly seen people been forced, to make those choices over the last year?
Yeah, I mean, I think from a buyer perspective right now, it's absolutely wild, right? I mean, we're hearing of whether it's Shreveport, Louisiana, here in North Jersey, or, in Chicago, we're hearing about multiple offers. The NAR Consumer Confidence Index, you see more and more increases in the amount of offers being made on listings out there right now. And things are going for 10, 20, 30% over asking price. And I think what's happening right now is you're actually even having people, in order to be competitive and get that home, they're actually waiving contingencies, they're waiving inspections and things of that nature because of the lack of pure inventory that's on the market. And you got right now 1 in 3 people are telecommuting, working from home, and so they're looking to move out into the suburbs and rural areas, even resort communities, and it's really driving demand in almost every single market.
So, Mike, let's think a little bit longer term here. We've had an exodus of people out of cities during the pandemic, but now lots of folks are starting to get back to working in the office. What does that mean for the housing market over the next 2 to 3 years?
Yeah, I mean, I think all things are cyclical, right? The big losers like New York and San Francisco and Chicago, those marketplaces will come back. They ultimately will. But I think, we as a society have got pushed out of our comfort zone and into this area where, I don't believe we'll ever be back in the office 5 days a week, right? I mean, I think folks will recognize, hey, look, I might have to go into the office 2 or 3 times a week. I can still be effective and efficient working from home. I know Ford just made a big announcement about that last week. And I think you're seeing more and more companies think about, the ability to work a little bit more from home. And that means that people need more things out of their home. They want the home gym. They want the Zoom room. You've got now 89% of your buyers looking in rural or suburban marketplaces compared to 78% was the number last year. And so I think you're seeing a lot of millennials and Gen Zers who are getting into the market. They're driving that demand up. And look, we're going to have record household formations over the next few years because of those generation segments that again are not looking for necessarily the condo in a small space in New York City anymore. They're looking for a more rural area where they can spread out.
Mike, finally, I just quickly want to ask you about price. As we showed, the median home price in February, $313,000, I believe, was where it was. Where do you see stabilization there? How high do you think that is going to get?
Yeah, I mean, I think it's all a supply and demand thing, and I do worry a little bit about price, especially if mortgage rates are going to creep up, which is what MBA and Fannie believe it's going to happen later on in the back half of the year. So you got to get a little bit concerned there. But yeah, I mean, it's all a supply and demand thing. As soon as the demand comes down, which I don't know if it will anytime soon, you'll see prices start creeping back down. So it'll be natural with the market, and we'll see how high it goes.
Yes, we will. We'll check back in with you about that. Mike Miedler is Century 21 CEO and President. Thanks, Mike. Good to see you.